good evening, good afternoon, good morning from wherever you are in the part of the world. Just want to say, I love you guys so much. I love you guys so much that you are here and you are here to learn. I love people that put themselves out there because they want to learn, because it takes a lot of humility and courage to say, I do not know, so I want to go and learn. So I just want to say, just give yourself a clap and say, I've made it here. I've been courageous. You are the best, and you are going to succeed in all that you do if you always keep that which you have. My name is Isaac. I am formerly known as Isaac Easy. And as of this year, I have removed the name Easy from my name. If you do not know, I only go by the name Isaac now. So no more Easy. I'm old now, okay? A father of four, I can no longer be called Easy. So now I go by my real name, my ID name, my government name, which is Isaac. I'm all the way from South Africa in a small town called Tzaneen in Limpopo. I have been in this trading business just for, I think it's about 12 years or 13 years now. I started trading back when I was still in corporate. I used to be a car salesman, and that's when I started my trading journey. It has been a great journey. I believe at the age of 21 or the age of 20, I can't remember. It's been a long time ago. I made my first million. As a young man, I've been named one of the youngest influential people in South Africa, and I've traveled the world. I've done really great things. In this industry. I'm one of the pioneers of the forex trading industry within South Africa, Botswana, Namibia, different parts of the African continent, the SADC continent. So yeah, man, I am super excited to have you guys here today. I see we have people from Kenya. I see we have people from Namibia. We have people from Nigeria. My Nigerian brothers, I'll be in Nigeria very, very soon. So I'm super excited to have you guys here. Are you guys ready for today's session? If you are ready for today's session, please make sure that you send me a fire emoji, because it's winter and you can see I don't have my jacket on. So I need to feel the heat. I need to feel the heat for us to go on. So give me some fire emojis in the comment section. Right, Isaac, I am ready. And let's go. Let's go. Let's go. Let's go. All right, are you guys ready? Before I begin, guys, I just want to give out a risk disclaimer because I'm legally required to do so. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76% of retail accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take high risk of losing money. Now that we have that out of the way, let's get on to the business of the day. As I said, I want to see some fire emojis in the comment section. All right, today we're going to be discussing understanding trading approaches and market participation. Trading approaches and market participation. What approaches you should be using in different market conditions. That's what we're going to be talking about today. All right. If you guys are ready, I'm still waiting for the fire emojis. I'm still waiting for the fire emojis in the comment section, so you can keep me warm, guys. It's winter in South Africa, so I need to keep warm. All right. Are we ready? Are we ready? Are we ready? Let's go. I don't see enough fire. I need enough fire for us to start. I need enough fire for us to start. Okay. I say here that many traders struggle when emotion overrides structure. All right. Many traders struggle when emotions override structure. Now, I often hear people saying, in trading, we trade probabilities and not certainties, which I believe is true. But many a times, people trade their feelings towards what they perceive as a probability. I'll say that again. Many a times people don't trade the probabilities, so they don't trade according to structure. They trade based on how they feel about what they see. And today we are going to diminish that approach to the market, because that is one of the biggest factors that contributes to you becoming a non-consistent and a non-profitable trader. All right. I say here that if you know the enemy and you know yourself, you need not fear the results of 100 battles. Now, this is a quote from a book written over thousands of years ago. I think it's about 2,500 years ago by a man called Sun Tzu. It was a book on war called The Art of War. But this concept applies across all board. It says, if you know the enemy and you know yourself, you did not need to fear the results of 100 battles. In this concept, you need to know yourself, and your enemy is the market, because the market is a battlefield. And what happens is that the market amplifies internal emotional patterns. I had a friend of mine that said, nothing exposes your weaknesses than trading, all right? Nothing exposes your your hidden emotions than trading, all right? So guys, I see someone says network is very bad. Can everyone hear me? Can you guys hear me properly? Can you guys hear me? I see someone is saying the network is very bad. I hope it's your network and not mine. Still good. Okay, 100%. So as I was saying, the market amplifies internal emotional patterns. So how you react to the market is usually based on broken emotional structure inside of you. And that's why I said a lot of people don't really trade probabilities. They trade their feelings towards probability. And today we are going to destroy that approach into trading so you can have a more structured approach. All right, please engage with me in the comment section. But if you do have a question, let's leave it for later on when we have our Q&A session. But as we go, please do engage with me, share with me your experiences as we go on with the session. All right, now I have a question for you guys. What do you believe affects traders the most? A, is it strategy? B, is it psychology? C, is it risk management? Or D, is it market conditions? What do you believe affects traders the most? Is it strategy? Is it psychology? Is it risk management? Is it market conditions? I want to hear your thoughts about this so I can know where you guys are. Some people are saying psychology, others are saying strategy. Which one do you guys believe affects traders the most? A lot of people are saying psychology, and you are correct in saying that. You are correct in saying that. Why do I say that? Because many times in trading, you may often hear me saying, in trading, we don't necessarily get paid for what we know. We get paid for the quality of decisions we make. I'll repeat that and make sure you write it down. In trading, we don't get paid for what we know, but we get paid for the quality of decisions we make. And what affects our decision making? Psychology. Because I'm supposed to do this, I'm supposed to do that, I'm supposed to do that, but you don't do it. Why? It all boils down to psychology. And today we're going to be breaking down that as well. A lot of people are also saying risk management. I agree with you guys, even when it comes to risk management. All right. Now, I want you to think of the market as a battlefield. All right. Remember, I said, Sun Tzu said, if you know yourself and you know the enemy, you don't need to fear any battle. All right. Now, I want you to think of the market or forex trading as a battlefield. You are at war. All right. Markets constantly change conditions. It's your mental flexibility that determines how long you survive in the market. Markets are always changing. In the past few months, we've seen that a tweet from Donald Trump can change the markets. Something can happen in Iran or wherever you are and you're sleeping, and by the time you wake up, your trades have been affected. So the markets are constantly changing, but your mental flexibility, not your strategy, not your risk management, but your mental flexibility determines whether you will survive in the market. And we talk about there's three types of market conditions. We have trending markets, we have ranging markets, and we have volatile markets. These three market conditions require different approaches. All right. These three markets require different approaches, and we're going to go through each of them so you can understand how to approach each of them. And we say here, water shapes itself according to the ground. If you're from the villages like I am, you will see there's rivers, and the river will flow in accordance to the ground. Okay, water always shapes itself to the ground. It does not matter if there's a rock or there's a valley. Water will shape itself according to the ground. And that's the approach you need to have. You need the flexibility to shape yourself according to the market conditions that you are facing at that particular time. You cannot use the approach of a trending market in a volatile market. You cannot use the approach of a ranging market in a trending market, vice versa. All right. So you need to be flexible, have structure, but also be flexible to approach the market differently based on the market conditions that you are currently in. All right. Now, a question that I am going to pose to you guys: which market condition frustrates you the most? Which market condition frustrates you the most? Is it trending market? Is it ranging markets? Is it volatile markets? Or is it news events? All right. Trending market, ranging market, volatile market, or news event. Which one frustrates you the most? For me personally, it's a ranging market. I hate ranging markets. I hate the markets that are just consolidating. Decide, are you going up? Are you going down? Are you giving me money or you taking my money? Make a decision. All right. Don't just be going sideways. All right. We want to see the market shoot up or the market shoot down. So ranging markets frustrate me the most because you just don't know what you're going to do. All right. So that's for me, that is ranging markets. I see a lot of people saying volatile markets, others saying news events. I see others saying ranging, volatile. A lot of people are saying volatile markets. Well, that means you haven't been having a good time, Tabi. So you haven't been having a good time in the past few months now, have you? Okay, let's move on. Now, let's first discuss trending markets. How do you approach trending markets? All right. How do you approach trending markets? Okay. We're gonna discuss what are the characteristics of a trending market, the strategic behaviors that you can use to approach those markets. Are you guys still with me? I see someone is saying buffering nonstop. Another one saying that. Are you guys still with me? Is the network still good? Are you guys still with me? Is the network still good? Please just confirm before I move on if we are still together. So just make sure that I'm not leaving people behind. Network is good on this side. Others saying we're still good. Okay, no, 100%. Trending markets, all right? Trending markets. What are the characteristics of a trending market? You have directional bias. The market is either going up or going down. It's self-explanatory. Market is trending up, market is trending down. All right. What is another characteristic of a trending market? Institutional continuation. You notice that in a trending market, the market just keeps going. And you have pullback opportunities. You'll notice also that when the market is trending, it doesn't just shoot up, it moves in a zigzag position. All right, it goes up, down a little bit, up, pulls down a little bit, up, pulls down a little bit. And those pullbacks are opportunities for you to ride the wave. All right, momentum often influences the market direction. Now, what strategic behaviors can you use in a trending market? Trade with the strength and not against it. Trade with the strength and not against it. That means move with the trend, move with the flow. Don't swim against the tide. That's how you drown. Move with the flow. Now, I often see a lot of traders. I mean, I have been in this business for over a decade. I have trained over 10,000 traders. And I often hear this thing. People saying, yeah, no, when it gets here, this market must change direction. All right. When it gets here, it must change direction. Have you guys said that? Have you said it yourself? Have you had people say such things? All right. It's like the market is moving. Why are you forcing it to change direction? Just move with the flow. Just move with the flow. Don't trade against it until you start seeing reversal patterns that indicate that the market has lost momentum and we are about to or someone is saying they once served me. Thank you so much. All right, stop asking will it reverse. Stop asking such questions and start asking what is price communicating. Stop trying to get in front of the market. All right, stop trying to get in front of the market and rather just follow what the market is communicating. All right, I know in life we are always taught to be proactive. It's nice to be proactive, it's nice to think ahead, but when it comes to the market, please, pretty please, be a follower and not a leader. Do not lead the market, follow the market. Think of yourself as a trailer. If you know a truck, all right, it has a trailer. It's the truck, the head, and then it has a trailer. The trailer follows the head. Now, if the trailer tries to lead the head, we're going to have a problem. We're going to have an accident. So be like that. In a trending market, please do not trade against the trend, but trade with it. All right. Are we guys still together? Shout out to you, China. Shout out to you, China. Thank you so much. Thank you so much. We're still good. We're still good. All right. You know what? I think, can I ask in the comment section? Can I ask in the comment section, guys? Is there anyone here who's never traded before? Like you've never traded before. You don't understand what we're talking about when we talk about trends, when we're talking about ranging market and volatile markets. Is there anyone who has no idea what we're talking about? Please let me know in the comment section before I move on, because I wanted to know if I can share my screen and show you different types of markets so you guys understand these markets. All right. But you need to train your eye to read conditions before reading direction. You need to train your eye to read conditions. Am I in a trending market? Am I in a ranging market? Am I in a volatile market? All right. I think for the sake of time, because we started a bit late, what I'm going to do is towards the end, I am going to open my chart and I'm going to show you different types of market we can go through. Because once I get on the charts, I lose it, man. I see so many things. We'll spend a whole hour there. So let's rather keep it until the end, and then I'll just show you guys different market conditions on different instruments. Is that okay? Is that okay with you guys? Give me a thumbs up. Give me a fire emoji. Oh, a lot of people seems to be having network problems, man. All right. I don't see any objections, so I am going to move forward. Now let's look at ranging markets. Understanding the market equilibrium. All right. What are the characteristics of a ranging market, and what strategic behavior can you use to trade those markets? All right. Now, what do you call a ranging market is literally market equilibrium. All right, it's sideways movement. The market hasn't decided whether it's going to go up or it's going to go down. All right, just moving sideways between two prices, just moving between two prices. All right. Ranging market is consolidating markets. Absolutely. The market is just consolidating. It's doing liquidity grabs. So it's literally just chowing people. Others are buying, it goes down. Others are selling, it goes up. It's literally can just be liquidity grab. There is lack of commitment, whether we are trending up or trading down. So there is no directional bias. All right. Now, how do you trade this market? Personally, I would say stay away. All right. But other people, they trade boundaries. All right. So they trade the bounce. All right. ranging between two prices. Let's look at gold, for instance. Let's say prices ranging between 4,550 and 4,560, for instance. It's been ranging within there. So what other people will do, they will trade when it gets to a 60, because it's still ranging, they will take a risk for it to go up, to go down. And when it gets to a 50, they will take a trade for it to go up. So other people train boundaries, not emotion, all right? What you need to do in this market, you need to detach from certainty addiction. I mentioned earlier that in trading, we don't trade certainties, we trade probabilities. I laugh when I hear people saying, I know it's going to go down. That means you're certain. You cannot be certain in trading. Remove that. And I know you're trying to feed your ego, so it makes you feel like you've mastered this thing. That is what will cripple you in this business. So detach from certainty addiction. Do not be addicted to being right. In trading, it's not about you are right or wrong. Okay, it's not about being right or wrong. It's about making sure that you maximize your profits when you are right and minimize your losses when you are wrong. He knows when to fight and when not to fight. A great warrior, remember I said the market is a battle. A great soldier knows when to fight and when not to fight. All right. A great warrior knows when to fight and when not to fight. All right. For instance, I said, I'm a great soldier, toy soldier. I know I don't like trading ranging markets. It's a decision that I've made for myself, but that doesn't mean that you cannot trade it. Different stokes for different folks. All right. Now, here's a question for you guys. What causes most bad entries? Is it FOMO, the fear of missing out? Is it impatience? Is it overconfidence? Or is it lack of planning? Let me know. A, is it FOMO, the fear of missing out? 2, is it impatience? 3, is it overconfidence? And 4, is it lack of planning? What causes most bad entries? Let me know. Lack of planning. Someone says lack of planning. Let me know. Let me know. Guys, let me know. What causes most bad entries? Let's engage. Let's engage. Lack of planning. Lack of someone, another one says lack of planning. Let me know. Is it the fear of missing out? Is it just being impatient? Is it overconfidence? Is it lack of planning? Impatience. Someone else says impatience. Another one says FOMO. Personally, I believe it's lack of planning. A lot of people are agreeing with me. They're saying D, which is lack of planning. Why do I say that? You often hear of a saying that says if you fail to plan, you plan to fail. And I believe FOMO, impatience, and overconfidence, their foundation is lack of planning. So if you approach the market without proper planning of what exactly am I looking for before I make a decision, that's why you will have bad entries. All right. Impatience, yes, does play a role, but it also stems from lack of planning. The fear of missing out stems from lack of planning. Overconfidence stems from lack of planning. I was talking to one of my students today, and I was just telling him that trading needs to be boring. It does not need to be spontaneous. If trading is still spontaneous for you, if it's still too exciting, you haven't become a professional trader. If what you do today is different from what you do tomorrow and what you do next week, you haven't become a professional trader as yet. Professional traders follow structure. They plan, okay, I'm going to trade between 9 o'clock and 10 o'clock. I am going to take my entries based on these parameters being met. 1, 2, 3, 4 needs to be met before I can make a trade. Planning. If the market does not do what I have planned, I do not enter. And if the market gives me everything that I have planned, then that's when I enter. All right. So ensure that you plan your trades. All right. And trade your plan. How trade your plans and plan your trades. Someone says it's var. It's var, me pra, it's var. Right. Chaos reveals trader psychology. Now, if you want to know what type of a person you are, trade volatile markets. You will soon know that you don't have a good personality. You are very impatient. You easily get angered. You can't control yourself. Is any one of you here has any one of you here ever threw their phone or threw their laptop away after losing a trade? Or you just hit a tip, or you're just frustrated, you start punching the walls. Has anyone ever done that? Let me know. Let me know. Let me know. I know you are here. Don't lie. I know you are here. I know you are here. Confess now so we can help you. They say that the number one step to getting help is acceptance. Accept that you have a problem. Okay, accept that you have a problem. It has been revealed in chaotic market. It has been revealed in volatile market. It hits you, it goes the other way in your direction, and you lose money. You take your food, you throw it away, or you start cussing at people. We know, we've been there. People are not, they're not saying anything. Victor has confessed. Thank you, Victor. That's how you get help. That's how you get help. All right. Volatile markets will always test and reveal your psychology. All right. Volatile markets reveal your psychology. All right. Where things just don't go the way you have planned, when things just move sideways, where there's just chaos, how you act under pressure reveals your true psychology, right? Because when there's trending markets, it's easier, to see, to be calm. But when the markets are volatile, you'll see that there is a lot of chaos. All right. What are the common behaviors when people are faced with volatile markets? All right. Revenge trading. You know why you revenge trade? Because your ego is stung, buddy. Your ego is stung. Me, I'm trying to contain myself every time that happens. So you try. Someone says my phone almost broke. Kinan says I did it today. My phone almost broke. It's okay. You'll learn today how not to throw your phone. Okay. Okay. So, what are the common behaviors that show that the real you? Okay, the real you. I had someone say, maybe you guys know this guy, Jordan Peterson, very very controversial guy, but he says you have to be a good person and a dangerous person. Okay, and by that he says we cannot test your morality if you are weak, but if you are capable of being dangerous, but you contain yourself, that's where we know that you are really a good person, and you have morals. Because if you are just a coward and danger comes, you run away, there's really nothing to test it. So what am I saying? I'm saying is how you behave when chaos happens in the market is really a reflection of who you. If you are able to contain yourself in chaotic market, in volatile markets, when things don't go your way, then you have mastered the art of trading, and you have mastered self-discipline. All right. It's about, yes, I feel I am angry and I want to throw myself, but I am so disciplined that I will not do it. That's the place where you want to get to. All right. Let me not digress. Okay. Common behaviors: revenge trading, oversizing, emotional entries, and strategy abandonment. Again, today I was speaking to a guy who says in the past 2 weeks I tripled my account. But then the last 3 weeks, but this past week, then I started losing every day. What should I do? What should I do with the strategy? I feel like it's not working anymore. No, the strategy worked for 3 weeks. It doesn't work for 1 week. Now you want to change, you want to abandon the strategy and try something new. No, no, no. It's because ego. Your ego has been touched because you are obsessed with being right. the obsession to be right, the obsession of certainty. It's like you feel if you lose, then there's something wrong with you. No, it's just that your strategy didn't work at that time, but it worked 3 weeks. 3 weeks. 3 weeks it was working. Your strategy was just not fit for that market condition. What you should be doing is not change your strategy. Start understanding the conditions that your strategy does not fit, and you stop trading those market conditions. Your problem is you want to make money every day. Every single day you want to make, when you want to be 100% right all the time. My friend, calm down now. Ego. It touches your heart and you start feeling much. No, relax. All right. Volatility is not the enemy. Emotional instability is. So there's nothing wrong with the market. The market is not against you. All right. The problem is your emotional instability. Even in chaos, there's opportunity. You've ever seen guys that always kill news events? Always kill news events. Always kill news events. All right. They always kill news events. Have you seen those guys? There is opportunity even in chaos. All right. So what we need to do is work on our emotional stability as opposed to just hating the volatile market. Volatility is not the enemy. Even in chaos, there is opportunity. Are we still good? Are we still good? All right. Now we are getting into the deep stuff. Emotional awareness. Now tell me, okay? Let me know. What changes in your behavior after you have many losses in a row? All right. Is it increased aggression? Do you become more aggressive, whether in the market or even physically with the people around you? Do you become hesitant? Do you become hesitant? Hesitation, does it kick in? Or is it fear? You start being fearful. Or impulsive recovery attempts. You enter, it goes down, you jump out, you enter again, it goes up, you jump up. What happens? What happens to you? Let me know in the comment section. What changes in your behavior after many losses in a row? All right. What changes? Oh my God, I speak a lot, guys. We haven't even done half of what we're talking about, but we're almost 45 minutes in. Somebody needs to stop me. I'm just passionate about this, guys. I'm passionate about trading, and most importantly, I'm passionate about empowering people. Let me know in the comment section, guys. StreamYard, I see a lot of people are quite silent now. Fear and revenge, then hesitant. Someone says hesitation. A lot of people are saying hesitation. All right. It's important that you become emotionally aware. All right. Increase your self-awareness around the recurring patterns. Start writing down, guys. I cannot stress this enough. Start writing down, how do I behave whenever I lose many times on a row? How do I behave? Write it down. You need to be your self-monitor. You need to monitor yourself and write down, because you'll start seeing patterns. And as I believe it's Albert Einstein who says, you can never solve a problem at the same level it was created. You need to dig deeper. So before you solve a problem, you need to be aware of what the problem is and what the root is. Many times what we try do in trading is we try use cough syrup for TB. All right. Now, the symptoms are quite the same. We are coughing, but because we don't know whether it's TB or it's just a cold, we want to use a cough syrup. But there's a deeper problem, which is the virus of TB. Is it a virus or whatever it may be, right? So we try and fix the surface level, but we don't go deep down into the root. So we need to make sure that we become aware. We need to increase our self-awareness around occurring habits. What are the things that I do the most well, whether I'm winning, even positive, both positive and negative? because you reinforce the positive ones and you start working on the negative ones. All good? All right. Are we still good? All good? Impulsive action and fear, increased aggression in the market. It's quite amazing on how we all react differently to the same condition. It shows also what I always say, that in trading, there is no one size fits all approach. There is no one size fits all strategy. Because if I teach someone who is faced with fear the process to follow that someone with impulsive action and increased aggression, you see that this thing won't work. So that's why it needs to be personalized. All right. Okay. So we can, that's why I always say, guys, many strategies work. Many strategies work. The difficulty is finding a strategy that works for you. I'll say that again. Many trading strategies work. Many of you may have heard me say this. Many trading strategies work. The difficulty is finding a strategy that works for you. Why? Because we are all different people with different personalities. All right. So you need to be able to develop a strategy that is best suited for you as an individual. All right. Risk is positioning. All right. Exposure determines survival. Let's talk about it. Poor risk management can negatively impact trading strategies. All right. Poor risk management can negatively impact trading strategies. Now we are digging deeper into it. All right. Do not fully rely on your skill. Do not fully rely on your skill. Right. Do not fully rely on your skill. I'll say that again. Do not fully rely on your skill. There's a quote that I wrote here that says, do not advance relying only on sheer force. Do not advance only relying on sheer force. What does that mean? Is if you only focus on the thing that you are good at and rely only on that, you will be surprised. How many of you have ever blown your trading account, but you still got the direction right? Raise your hand. Let me see your hand in the comment section. I know all of you have done that. Let me see your hand. Raise your hand. Okay. You got the direction right. You entered. The market just pulled back a bit. You blew your account, and then it still went to your direction. You relied only on your strategy. You relied only on sheer force. And this risk management thing took you out. You had the direction right. Everything was right, but your risk management was wrong. So, what I say here is poor risk management can negatively impact trading strategies. Okay. High risk changes nervous system behavior. All right. When you are a high risk taker, it changes your nervous system behavior. Oh, guys, this is. Are you guys with me? Do you understand what I'm saying? Like, it messes up with your decision making quality. Just taking high risks, it messes up with your decision making quality. And remember, in the beginning, what did I say? In trading, we don't get paid for what we know, we get paid for the quality of decisions we make. And one of the things that that pushes us, that propels us to make low quality decisions is risk management. High risk, taking high risk. It affects a good strategy, it affects a good setup. Just one bad risk affects everything else. Out of 9 things that are good, only one that's bad affects all the other 9. It's like having a good meal of healthy food, salad, on all of these things, good iron, nutrients, protein, all of that, and you just add a sprinkle of poison. You will die, yo. You will die. Pooh, we will bury you. Doesn't matter how healthy the plate was. Just small sprinkle of poison messes up everything, and that is what high risk does to you as a trader. It is poisonous. It kills trading careers. All right. So good risk is positioning. All right. Your risk exposure determines your survival in trading. Okay, guys, we are now at quiz time. I am going to hand over to our host of the day, Mr. Joshua. All right. And it's time for you guys to win some amazing prizes. Let's go. Mr. Joshua.
Yep, I'm here. Fantastic, everybody. Yep, we're coming to
I
the
believe
question
you are
and
muted,
answer.
Mr. Joshua. We cannot hear you.
I'm not muted. Can you hear me? I'm not muted. Can you hear me?
I don't know if it's just me or.
Can everyone hear me? Can someone tell me whether you can hear me or
But I
not?
cannot hear you, Mr. Joshua.
Anybody can hear me? Yep, everybody can hear me. Looks like only Isaac can't hear me. So it's okay. So we're going to continue first. It's
Maybe
all right.
it's just me. I cannot hear anything.
Okay, so let's continue with our Q&A session. Mr. Isaac, can you hear me? Looks like he can't. It's okay. So let's just continue, everybody. So what is the primary goal of emotional awareness exercise after 2 consecutive losses? Is it to increase self-awareness or reoccurring patterns, to find a new strategy, C, to win the next trade immediately, or to double the risk to recover? Because remember, the first person to win, or sorry, the first person to answer correctly and the fastest will win the prize, okay? All right, so ladies and gentlemen, yep, we are looking at this all A. Yeah, all A. Yeah, I think that was a very easy answer. Not to worry. So we are definitely going to see who's going to be the winner, because I've got my team at the back who's going to select the winner, because the fastest person with the correct answer will win. And yes, all right. So we're just trying to get Mr. Isaac up as well. Of course, we got another one. How much does traders usually risk emotionally? Too little, appropriate amount, too much. Depends on losses. Well, it really depends on whether you get it right or not. So a lot of A again, a lot of A's here. Yep. And well, looks like everybody's going for an A as well for poll number 4. And no, got one C here, too much. Yeah, I think when people get very emotional, so much. How much does traders usually risk emotionally? Sometimes too much, sometimes, because when we see the game going up, going down, it really risks the situation. And of course, ladies and gentlemen, it goes crazy. So, Mr. Isaac, if you can hear me, you just come in whenever you want to. Not a problem. I'm not sure whether you can hear me or not, but yeah. So yes, so we've got Kikiso is the winner for this particular question, and Kikiso will see. Let me check. Yeah. All right. So if I think the winners will be selected later, not to worry as well, and we'll see how it goes from there. Okay. All right, so too much. Yeah, I think it is going too much as well. All right, so let's go to our next poll. Yep, definitely. So you just got to be a bit careful when you are actually trading, right? You don't want your emotions to go all haywire and then start investing too much and all that kind of stuff. So make sure that you do, risk management a little bit more, especially when you do trading as well. So it's something that everybody has to really look into it and make sure that everybody's doing well as well. All right.
All right, all right. Congratulations to our winners there. Congratulations to our winners. Thank you so much, Mr. Joshua. Thank you so much. Are you guys ready? Are you guys ready to move forward? Are you guys ready to move forward? Are you ready? Now we are diving deeper into it. We are diving deeper into it. I'm taking you step by step, just taking you layer by layer, layer by layer until we get to the core thing. Are you guys ready? If you are ready, let me know in the comment section. If you can hear me, let me know in the comment section. Let me see some fire emojis. As I told you, it's winter. I need some fire. I need you guys to warm me up. I need you guys to warm me up. You know, as you guys were so active, can you guys hear me? Please confirm if you can hear me on StreamYard, YouTube. Please confirm if you can hear me. All right, I see some fire emojis there warming me up, so I guess they can hear me. Let's go, let's go, let's go. So now we're going to talk about account sizing and the thinking patterns, all right? Account sizing and thinking patterns. I say here, smaller account sizes may create additional psychological pressure for some traders. I know many times they don't want to hear me. They don't want to hear me say this. They don't want me to say this because South African traders, you are obsessed with growing small accounts. We're not gonna get into it. We're gonna do a podcast for that one where I talk too much about it. But I say here, let's be serious now. Smaller account sizes may create additional psychological pressure for some traders. All right, not all. All right, for some traders, and may create. Okay, I'm trying to be as political as I can be, but we'll talk about it on a podcast. Okay. What are the common behaviors when it comes to smaller accounts? Over leveraging, because you don't have a choice. If you're making 1% of $20, it's only what? It's only 2 cents, right? So it doesn't make sense. So by the mere nature of your account or the size of your account, it kind of forces you to over leverage. Whether you wanted to do it or not, you just don't, you kind of like don't have a choice. All right. All right. Number 2 is it creates a gambling mindset. Yeah. It creates a gambling mindset. That's why you'll often see, forgive me for this one, a lot of people that fund small accounts, they end up going to Betway and Aviator. I don't know what are the new ones. These are the common behaviors. Remember, guys, over and above being a trader, I'm trained in human behavior and human psychology. I understand these things from a psychological perspective, okay? The reason why you have a gambling mindset is because of smaller accounts. Now it's good. Let me balance that. As you are starting out and assessing the risk, it's good to start with a smaller account. But over a long period, you need to build out your capital because it is a numbers game. All right. And lastly, it creates emotional agency. So many a times when you're trading with the small accounts, if it's from a perspective of scared money, this money was meant for something else that you need to do, and you're just trying to double that money or triple it or whatever it may be. So it creates emotional agency that you may not even be aware of. The urge to make a lot of money quicker. Emotionally, you feel entitled to making that amount of money emotionally. So these are the common behaviors we see with the thinking patterns based on the account size. All right. What are the professional behaviors that you should be gunning for? Consistent execution, fixed risk. What did I say? Risks. Fixed. By fixed, I mean be consistent with your risk. Don't increase your risk because now you're profitable. Have you ever, you were trading nicely, made money, and then all of a sudden you felt overly confident and you just increased your risk. And by increasing your risk, the account is gone. All of it. I'm not a prophet. It just happens. It happens. So you need to ensure that you have fixed risk and you need to have a long-term thinking. Let's talk about this one. Or should we leave it for the podcast? But let's talk about it. Do not, traders, hear me. Traders, hear me well and hear me well. Life is long. Don't believe the hype that life is short. You only live once. You live every day, and life is long. And it's longer when you're making bad decisions. Okay. Life is longer when you're making bad decisions. If we have people over the age of 30 here, you know exactly what I'm talking about. I'm not talking about you personally. It's not a personal attack, but you know what I'm talking about. We need to learn to think long term. Let us not sacrifice long-term rewards for short-term satisfaction, guys. Let us not focus and lose long-term rewards. Let's build with a long-term mentality. Let's build our trading based on long-term strategies, long-term thinking, not short-term. It's so sad to see a lot of people coming into the industry 2 years at most. They are up, they are down, they are forgotten. We see the same story over and over again. And hear it from me. I am a fossil in this industry. For some of you, when I started trading, you were 5 years old. That didn't sound as cool as I thought. It just made me feel old. All right. But it's the truth. For some of you, all right. All right. For some of you, like when I started trading, you were 5 years old and now you are trading. And I'm telling you, I've seen it. You see, I've seen it happen over and over. It's the same story over and over again. Even now, there are some young boys that have been speaking as like, this is what's going to happen to you. And it's not that I'm being, being bad. It's just the truth. I've seen it happen. So let's have a long-term thinking. All right. Long-term thinking. And why is that important? Because your brain responds to perceived threats. Again, linking it to the account size. Your brain responds to perceived threats. Okay. All right. Perceived threat. So if it sees it as a threat, it affects your decision making. It affects your decision making. Let me not get into that before I digress. All right. The young boys are killing it, man, but they need to think long term. They need to think long term. It's sad to see our brothers balloon success. You go up, poof. All right. We don't want that. All right. So now let's get into it. I've been talking about a lot of problems, just highlighting a lot of problems, but we need to know how to deal with them. All right. Now I've dealt with the what. Now we're gonna go into the how, and I've dealt a little bit with the why as well, but we're gonna go into the how. All right. So I'm trying to think of the approach that I can trade with this. All right. In NLP, in neuro linguistic programming, we have what we call a pattern interruption or a pattern interrupt, where in order for you to remember, I said we need to be aware of our patterns. We need to be aware of the patterns, right? But then how do we switch? You can't necessarily step patterns, but you need to interrupt them and you also need to replace them. Okay. They can lie dormant Because remember, some of these things are your own personality. Like, for instance, you can be a very impatient person personally, but because of I'm what we call a choleric personality. I'm results driven. I'm task driven. I like taking leadership. So patience is not one of my strongest points. But if you have been around me long enough, you'll realize how I seem to be patient with people. I've trained myself to replace. By nature, I'm very impatient. If you've worked with me, you'll realize how strict and, quick I am. But you'll also notice that I allow you to, if you've been my student or whatever, I allow you the patience. So by nature, I'm very impatient, but I interrupt and I replaced that trait with patience, so I can train myself to be patient. So I do what we call NLP, pattern interrupt. You'll see many times, even if I'm speaking, I'll stop and I'll pause and I'll think. All right, or I'll breathe. All right, I'm reassessing. All right, that's what I'm doing. I'm doing what we call neuro-linguistic pattern interrupt. All right. Now, in trading, whenever you start noticing those, someone here just mentioned that they met me and they served me in a restaurant. I believe it was China or someone, and I was so humble and so happy. If some people, if they hear you say that, they were like, "It's not possible." Him, humble and nice. No, we've seen a monster, right? So depending on where I am, I'm able to switch and do what's needed at that particular time because of the personality. But I am able to, yes, China, but I am able to interrupt. So in trading, that is very, very important to be able to interrupt the bad, negative patterns. All right. You need to interrupt the very negative patterns. All right. What you can do, these are some of the common interruptions. You can pause, just take a pause. It helps to pause. You're not rushing anywhere. Just pause. Just breathe. Reassess the situation and reduce your exposure. It's as simple as that. All right. Desperate traders violate structure. Desperate traders violate structure. It's as simple as that, guys. I don't know how much I can stress this. Am I making sense? Do you guys hear me? All right. Do you guys hear me? Okay, they can hear me. So whenever you are faced with the emotional and the negative, what you call emotions, it's important that you take a break, take a pause, ponder upon what is happening, not what you feel is happening, not what you feel should be happening. Pause, take a deep breath. Take it now, and you will feel how good it feels. Just okay. Whosa. If you've watched Bad Boys, they call it whosa. Whosa. Breathe. Reassess. What is happening? What is happening? Not what do I think is happening, or not what do I want to happen. What is happening? Not what is my perception, but what is reality. As a trader, many times you are always caught up between perception and reality. Perception and reality. And as I always say, desperate traders violate structure, guys. And you become a desperate trader when you are on what you call, when you are working from a perspective and not a reality standpoint. Does that make sense? All right. All right. All right. Now a question, guys. Let's go. What emotion affects traders the most? What emotion affects traders the most? Is it fear? Is it greed? Is it impatience? Is it revenge? Let's talk about it. Fear, greed, impatience, or revenge? Which emotion affects traders the most? A for fear, B for greed? Is it C for impatience? And revenge. Greed, 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 greed. Greed, man, greed. Oh my God. Other people are saying impatience, but a lot of people are saying greed. It's true. I mean, again, we are different people, different personalities. Other people don't struggle with greed. Myself personally, I don't struggle with greed. As I told you guys, impatient is a bit of a weakness, but we work on it. All right, we work on it. We don't use it as an excuse. It's an obstacle that we have to overcome. But greed is the number one emotion that affects traders. Why is that? Because trading has promises false hope. Trading promises false hope. What do I mean by that? Is because of the vast possibilities that are available in the market, you feel like you want to take all of them, and you feel it's possible for you to take all of these opportunities, and that's why it feeds your greed. All right, that's why many traders struggle with greed, because there's so many opportunities in the market. They want to trade and take all those opportunities, and thus that fuels greed. And greed is number one destroyer of accounts. It's linked to risk management that we already spoke about. That desperation creates traders who violate structure. All right, are we good? So now we're going to be discussing structure. Okay, every trade needs structure. All right, and again, I'm using a quote here that says, victorious soldiers win before they enter a battle. Victorious soldiers win before they do what? They enter a battle. Write it in the comment section. Victorious soldiers win before they enter a battle. You need to win before you even enter a trade. All right. You need to win before you enter the trade. What do I mean by that? You need to have a structure. Right, you need to have a structure. One is, why do I enter? This is how you build a structure for yourself. Why am I entering this trade? You need to have reasons for that before you even you even enter the trade. Every trade that you take, you need to have a why. Why am I entering? Based on what rules? All right, that's number one. Write it down. Why enter? Number two is, where is the invalidation? What must happen for me not to take this trade or for me to exit this trade? Where is the invalidation? Based on what I've written on number one, why enter? What invalidates that? Many traders don't know that. They only know that it needs to go to take profit. Did it tell you it's going to take profit? What if it does not want to go to take profit? Now I'm speaking like a big brother now. You hear? But please write down why enter. Where is the invalidation? All right. Number three, where is the target? Yes, the market is moving. It can go as high as it wants to go. It can go as low as it wants to go. But where is your target? If you become aimless, right? If you are shooting without aim, that's where anxiety kicks in. That's where panic kicks in, because there is no aim. All right. Where is the target? If you don't know where you are going, you will try and go everywhere. And it's not possible for you to go everywhere. Target. Where is the target? Write that down. Number one is why enter. You write all of them down. Where is the invalidation? What invalidates number one? Write that down. Number three is, where is the target? What am I targeting? Am I targeting a 1:2? Am I targeting 1:3? Is it on a dollar or a rand value? Is it based on key levels? Where is the target? How many of you have entered trades? You've entered the trade. It was in profit. great profit, and you just kept on holding until the trade reversed and blew your account or hit your stop loss. How many of you done that? I know you are here. I can see you. Even by your name, I can see you've done that. Okay. It's because you don't have a target and have realistic target. I often see people with the risk to reward ratio of 1:19. I'm like, what are we trying to do here, buddy? Are we trying to be written in the Guinness Book World of Records of the longest trade ever held? What are you trying to be, George Soros? Come on, guys. For me personally, personal opinion, a 1:2 is perfect. 1:3, great. 1:4, you are pushing it. 1:5, something wrong with you, my brother. But we'll talk about it on a podcast. All right. Number 4, what condition supports the trade? Write that down. You've written the reasons why you need to enter. You've written your invalidations. You've written your target. What other conditions confirm or support the trade? Then you write that down. Now you have a trading structure. You have a trading structure. All right. And how do you, again, remember the concept of today is trading in different market conditions. Now, how do you structure your trades in a trend? All right. Where do you get your entries? At pullbacks, at retests, and continuations. Someone is asking what's number 4. What conditions support the trade? That's number 4. What conditions? What other things are you going to add that can confirm the trade? Even when you take it, you write them down. Okay, this is what supports my bias already. All right. Now, your entries in a trending market, where do you take your entries? At pullbacks, at retests, and continuations. Write that down. Pullbacks, retests, and continuations. That's where you take your entries. All right. And obviously, that falls into market structure and so forth, which can be discussed on another day. All right. When we discuss market structure. All right. Risk, smaller size, wider structure based stops. How do you risk? Small size, wider structure based stop losses or key level based stop losses. All right. Your confidence in trading must come from process, not outcomes. If you only feel good based on a profitable trade and not on your process, you are in for a shock. All right. Your confidence in trading must come from the process and not the outcome. Whether the outcome was a stop loss or take profit, your confidence must come from the process, from the structure. All right. You need to be confident that this is what I do, this is what I have done, and this is what I'll continue doing, because you're confident in the structure and not the process. If your confidence comes from outcomes, that's why you're always strategy hopping. You're always moving from strategy up because your confidence comes from outcomes. And remember, again, I said it stings what? The ego. Let the ego die down so your confidence can come from process. All right. Now, what is a structure, or rather, what is your trade structure in a ranging market? All right. You buy low, sell high. Respect the boundaries. It's as simple as that. If you are trading a range, you buy low at the lowest price, which is your support, and then you sell high, which is at your resistance. All right. Respect those two prices that the market is ranging in between. All right. All right. The real battlefield in trading, all right, is the mind. We discussed it in the beginning. We said it's what? Psychology is the biggest issue for most traders. It's really the mind. The real battlefield is the mind. And what are the two most emotional triggers? I've been speaking about it. It's ego and it's fear. Ego and fear. At any given moment, traders are driven by one of these negative emotions. the need to be right, which is ego, and fear, which is the need for certainty. All right. Now, as you guys know, I always say many controversial things, but here I say, he who is angered can be manipulated. He who is angered can be manipulated, and I'm going to leave it at that. We'll discuss it at the podcast. But the two major emotional triggers is what? Is ego and fear. Ego is the need to be right, and fear is the need for certainty. All right. Are we still good? All good? All good? Talk to me. And now we're going to have a poll. Which behavior damages traders most long term? Right. Which behavior damages traders most in the long run? Is it overtrading? Is it poor risk management? Is it emotional exits or lack of patience? Overtrading, poor risk management, emotional exits, or lack of patience. Which behavior damages traders most in the long run? What do you guys think? What you guys think? Other saying is B, which is poor risk management. Okay. Realistically, all of the above. Okay. That is a great answer. That is a great answer. All of the above, they damage you long term. All right. Because all of them are interlinked. All of them are interlinked. They are all connected to each other. But they rise from one of the two, the need for certainty or the need to be right. Are we good? If you conquer those two, if you master those two, if you master your need to be right and not allow your ego to be stung, and move away from the need for certainty and understand that the market is neutral, it's not against you, it's not for you, this will help you in your trading. All right. All right. We spoke about pattern interruption, so I won't get too much into that. All right. But now I want to discuss neuro-linguistic programming techniques for traders that you can use to master forex psychology, for a lack of a better word. All right. Professional trading is emotional regulation under uncertainty. I'll say that again. Write it in the comment section as well. Professional trading is emotional regulation under uncertainty. Now, number one, what we're going to talk about is anchoring confidence. All right. We're going to talk about visualization. I won't get much into pattern interruption. We'll talk about internal dialogue and we will talk about state conditioning. All right. Are you guys with me? We're going to talk anchoring confidence. You need to anchor your confidence to something. We're going to talk about visualization, the power of visualization. I won't get into pattern interruption because we've discussed it already. Then we're going to get into internal dialogue control and state conditioning. All right. Let's talk about anchoring. All right. Anchoring. Number one, maybe let me first explain what anchoring is. In NLP, literally what anchoring is you attach your confidence to something. All right. You anchor to, so you give meaning, you give a different meaning to an event, if for a lack of a better word. Does that make sense? You give a different meaning to something. Something means this, you give it a different meaning. It's a reframing. All right. We anchor. All right. Number one, how do you anchor confidence? Is you recall a peak confidence moment. The best time you felt most confident, you remember that. All right. Then, secondly, you intensify the emotional state, whether it was sight, the sound, sensation, how you felt in that particular moment of peak confidence. All right. Then you now create a physical anchor, something that takes you back to that feeling. Oh my God, this needs a whole hour on its own. And there can be touch, it can be a gesture, it can be breath, right? For me, remember, and I did tell you guys when I talk about what you call what is this thing that we were talking about, pattern interruption, that for me pauses and taking breaths is very important, and my posture is very important, right? And I do this in meetings, especially when there is negotiations and it looks like I'm getting the lower hand of the negotiation. I literally just pause and I'll change my posture, the way that I'm sitting, and I'll take a deep breath, and my hands, how they are sitting, that makes me feel like boss and I'm under control. Literally, right? It makes me feel like I'm under control. And here's a fun fact: I'm very shy, right? Very, very shy as a person. But I anchor my confidence. Can anchor my confidence to the knowledge that I have. Can anchor my confidence to the experiences that I have. There's many things that I anchor my confidence on. That's why I'm so confident to speak with you guys. Does that make sense? Are you guys understanding what I'm saying? Please let me know if I'm making sense. You understand what I'm talking about. All right. So you need to create a physical anchor, whether it's touch, is gesture, is your posture, is your breath, whatever it is that you can do that makes you feel like, okay, now I am in touch with my confidence. In your trading, you do that. All right. Associate the anchor with a disciplined execution. Now, after I've done this physical anchor, what must I do? What is the next thing that I need to do? You write that down. And that's how you anchor confidence, all right? You recall a peak confidence moment, whatever it may be that makes you feel confident. It may be outside of trading, it doesn't have to be inside of trading, all right? Then you need to intensify, all right, the emotional state to how did I feel at that moment. Remember that feeling, own it, let it be there. You are so powerful as a human being, you are able to do that. I can say something about you now that reminds you of something, and you can literally feel as if you were in that more. You can feel now. Let me make no, let me not get into it, because now it's gonna make me feel that way. But I was gonna recall a moment in my life where I felt a certain way when something happened, that every time I think about that event, I literally feel that way. This happens both in the negative way. Memories, you ever just think of a memory that was such a good time and you literally feel so happy, like the way you felt when you were in that memory? Find a peak confidence and intensify that emotional state. Now create a physical anchor. What do you do that makes you feel like that? And now physically, and then now you anchor, or rather associate, what you call a disciplined execution. All right. Okay. Once I feel like this, remember I said we attach meaning, we attach a different meaning. Now, once I feel like this, okay, I'm sitting in a negotiation, I feel like I'm having the lower end. I do my anchoring rituals, and then what? What must I do? Gentlemen, this is what I think we should do. I am now taking control of the negotiation because I feel like boss. All right. Now I take ownership. All right. I take ownership of that particular negotiation. The same thing applies in trading. Once you've done your physical anchoring, then what disciplined executions are you going to do? All right. Quiz time. It's time to win. Are you guys understanding anchoring? Before I move on, do you guys understand what anchoring is? Anchoring to confidence. Does that make sense? Let me know. Let me know if you don't understand. Please just let me know I don't understand, or what part of it you don't understand, so I can get to it. If you understand, just give me a thumbs up, and then let's move on. Now we need to go to the prizes now. We need to go to the prizes now. Come guys, come guys. It appears the comments on StreamYard are a bit delayed. Okay, all good, all good, all good. YouTube, are we good? Tabiso, okay. I see people are saying we're all good. We understand. Okay, great. Guys, this is gonna change your life. I'm telling you, man, it's gonna change your trading game to a whole new level. All right, to a whole new level. It's really not as complicated and as difficult as it seems. It's really just changing a few actions, and you've got this thing unlock. Now it's time for a giveaway to see if you guys were listening. Let's get to it. Are you guys ready? The first person to respond, and they will let me know in the comments. So the first person to respond to the question, hey, let me go back there, just give you the rules. The first person to respond to the question will win the prize. All right, are you guys ready? Are you guys ready? In the comment section, are you guys ready? Then they will let me know who was the first person. Okay, question: which of this is a characteristic of a professional identity in trading? Which of this is a characteristic of a professional identity in trading? I need money now. I must recover losses. I execute probabilities. I need to catch every move. Is it A, I need money now? B, I must recover losses. C, I execute probabilities. D, I need to catch every move. Which one is the characteristic of a professional trader? All right. I need money now. A. B. I must recover losses. C. I execute probabilities. And D. I need to catch every move. Okay. Let's go to the answers. Let's see which one is the right answer. And our host team will let us know who won. Let's go. And boo, 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 boo. The answer is C. I execute probabilities. Let's see who won. Koketso won. Now, Koketso, you won the first time. Now you're winning again. Congratulations to Koketso. I feel we should get another. We should get another winner. Bell, who was our second winner? Let's get another winner because Koketso already won the first round. So who is our second runner up? Who is our second runner up? Let's go. Let's go. Let's go. Let's go. Sosa FX. Sosa FX is our winner. Boo, 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 boo. Congratulations, Sosa. Congratulations, Koketso. Let us move on. We're going to have this throughout the session, guys. And also, even at the end, there's going to be a big giveaway. So make sure that you stay until the end. Congratulations, Koketso. The team will reach out to you as well. Okay, now let's get to it. Guys, we're supposed to end now at 8, but I will try and finish this in the next 10 to 15 minutes so I can release you and I can also go home. By the way, guys, I'm a father. We just recently had a newborn, so I can't wait to go home and be with my baby. The month of May has been a great month. On the 1st of May was my birthday. 2 days later, I had my baby boy, beautiful baby boy, on the 3rd of May. And this month, I paid lobola for my wife, and I also got married in this month. So I'm celebrating my anniversary, my wedding anniversary, on the 31st. So the month of May is really a blessing for me. So with that, I'm just saying, I need to be out of here so I can go spend some time with my boy. Can go spend some time with my boy. Can go spend some time with my boy. You feel me? All right. All right. So, guys, I will be done. I promise in the next 15 minutes tops we will be done. Okay. All right. Oh, God, thank you so much. Thank you so much. Thank you so much, guys. Back to back wins for you, man. It's a great month. It's a great month. Okay, so yeah, but don't just say congratulations without this. All right, send this as well. Congratulations must come with this. All right, all right, all right. Identity drives behavior. All right. Identity drives behavior. There is a quote in a book called Atomic Habits that says we do not fall to our goals, but we fall to the level of our systems. We do not fall to our goals, but we fall to the level of, or rather, we do not rise to our goals, but we fall to our systems. That's the right. That's the right quote. We don't rise to our goals, but we fall to the level of our systems. The way I say it, and some of you may have heard me say it, is that you can never achieve what you are not. So it's not about getting, it's about becoming. So I'll say that again. You cannot achieve what you are not. All right, my battery's dying. Let me just charge that real quick before I get disconnected. Thank you. Sorry about that. I had not plugged in my charger. All right. You cannot write it down. Please write it down. You cannot achieve what you are not. So it's not about getting, it's about becoming. All right. Identity, who you are, drives your behavior. A lot of people want to be millionaires. A lot of people want to be successful. A lot of people want to be this and that, but they always get their results based on their identity, because it's not really about what you want, but it's about who you are. You attract to you what you are. All right. You attract the level of results based on the identity that you carry. Right. Does that make sense? Now, in trading, these are the identities that you need to do away with, and these are the identity that you need to start embracing. Weak identities, all right. I need money now. Who usually says that? That's not the identity, or rather, that's not the statement of a professional person, professional trader. That comes from a scarcity mindset. I need money now. I need money now. Money is scarce, but the economy is bad. I need money now. You're always coming from a place of scarcity. So you cannot attract abundance, even in trading. All right. I can't miss this move. That's another one of a weak identity that drives bad behavior. I need money now makes you react in a certain way, makes you act in a certain way. All right. All right. Are you guys with me? You guys getting that? These identities, they propel your behavior, because your behavior is automatic. It is determined by your identity. And I always say many of your trading decisions are automated. They are not what is this word? They are automated, they are not conscious, right? They are not conscious, they are automated. They stem from the identity. So if your identity is I need money now, it makes you behave a certain way. Another one is I must recover losses after you've blown your account. I need to recover losses. I must recover losses. Makes you behave a certain way. And as a result, you end up losing money. That is a weak identity. And you need to do away with that type of thinking. This is what you should embrace. I execute probabilities. I asked the question, what is an identity of a professional trader? You said it's C. I execute probabilities. All right? That should be your thinking. I preserve capital. As I always say, your number one priority in trading is capital preservation. Growth comes second. I'll say that again and make sure you write it down. Your priority as a trader is capital preservation. Growth comes second. All right. Patience is part of the strategy. Patience is part of the strategy. All right. Patience is part of the strategy. You need to embrace those identities. They need to become who you are. That's the way you should be thinking as a trader if you want to last long in this business. All right. Now I have another question for you guys. Which statement sounds like most traders? I need to catch every move. I'll wait for confirmation. I need revenge. I hope this works. Which one sounds like you? I need to catch every move. I'll wait for confirmation. I need revenge. I hope this works. Which one sounds like you? Let me know in the comment section. Is it A, I need to catch every move? B, I will wait for confirmation. C, I need revenge. D, I hope this works. For me, it's A and C. A and C. I need to catch every move, and as I hope this works. All right. Now let's go to developing a trading framework. All right. All right. Developing a trading framework. We have 10 minutes. Developing a trading framework. All right. A strategy without tactics is the slowest route to victory. Write that down, even in the comment section. A strategy without tactics is the slowest route to victory. All right. You need to develop a trading framework. Now, number one is market identification. Number two, when developing your trading framework, market identification. We spoke about the trading conditions. Number two is risk framework. What is your risk framework? All right. What's your entry model? That's number three. Number four is your exit model. Number five is review processes. All right. Market identification. That's number one. Number two is your risk framework. So your trading framework needs to have all these five. Your market identification. In this market, this is what I do. In this market, this is what I do. In this market, this is what I do. Risk framework. This is the type of risk that I go for in this particular market condition. All right. What are your entry models in a ranging market, in a volatile market, in a trending market? What is your entry model in all these different markets? What is your exit model? What do you do? I mean, what must happen in the market for you to exit? All right. And number five is review the process. Whatever you don't review and refine eventually stops working. All right. It needs to be progressive. So market identification, risk framework, entry model, exit model, and review processes. All right. Let's talk about reviews. Review creates improvements, as I just said, guys. Review creates improvement. You need to journal, all right? And these are the things that you need to journal, all right? So you can review. You can remember, I said, you need to write these things down. You can't just keep everything in your mind. You know, I always say, maybe some of you may have heard me say this. An average human being receives between 20 and 40 million pieces of information each and every day. You are learning now. An average human being receives between 20 and 40 million pieces of information with all their senses, your touch, taste, smell, sight, hearing, feel. Every single day, 40 million. Right. But the shocking part is, out of those 40 million pieces of information, an average human being can only retain between 5 and 9. Not million. 1, 2, 3, 4, 5, up to 9, 6, 7, 8, 9 in a day. Maximum 9. On the lowest day, 5. On an average day, 7. Out of 40 million, only 7 you can retain. So how do you know that's smart to to write down information? You need to journal your trades, because you cannot remember everything. Your mind deletes information. All right. If I can ask a lot of you here, what was on the previous slide, you don't remember because your mind already deleted that information. It's a filtering process in the mind that we call deletion. All right. Have you ever driven as you're driving? All right. You see stop signs, you see robots, It just happens automatically. You don't even pay attention. You don't know what's the color of the car on your left, the color of your car on your right. You saw them, your eyes looked at them, but you don't remember why. You received that information, but your brain deleted it because your focus was not there. All right. Are you with me? You understand that? So that's why we need to journal. This is just your brain as a human being overall. So even in trading, if you don't write these things down, unfortunately you won't remember them. This is why journaling is so important. What areas do you need to journal? Your emotional state. You need to journal your emotional state. Emotional awareness, we spoke about it. Write down how you feel in particular before the trade, during the trade, and after the trade. Market conditions, journal those. Then you start putting the link. Okay, in these market conditions, usually this is how I feel. Or sometimes it's even vice versa. You feel a certain way because of something external outside of trading. So you need to be aware of those things. Your rule adherence. Did I follow my rules? Out of 10 rules, did I follow all of them? Write down the mistakes. All right, what mistakes did I do and what lessons did I make? The goal here is to name the patterns. All right, naming precedes neutralizing. You cannot deal with the problem you haven't named. You cannot deal with the problem you have not identified. You cannot deal with the problem you are not aware of. So when you name the pattern, that's the goal. Awareness precedes behavioral change. You cannot change a behavior you are not aware of. Okay. So write all of these things down. It will help you to become a better trader. If you really want to be a better trader, you need to ensure you journal. I will stress that down. And these areas are so important. There are other things that you can journal. You can add on all of that. But emotional state, number one, market condition, rule adherence, your mistakes, and your lessons. So important. Okay. And you need to do a self-assessment after journaling. You need to do a self-assessment. What behaviors repeatedly damage your trading? What do you keep doing? What foolish thing do you keep doing that damages your trading? And then you need to have a reflection. All right. You write them down. Is it over trading? Is it fear? Is it lack of patience? Oversizing? Over trading? Emotional exits? Revenge trade? Whatever it may be, write it down. Write it down. You need to do a self-assessment so you can know. Remember, you need to name all of these things. All right. Now let's look at the difference between an emotional and a professional thinking. All right. This is how an emotional trader think, and this is how a professional trader think. All right. Emotional trader seeks excitement. I did say if trading is still spontaneous for you, you are not a professional as yet. A professional trader seeks consistency, not excitement. Emotional traders chases moves. A professional trader waits for setups. An emotional trader reacts emotionally. Professional traders execute systematically. Emotional traders need certainty. Professional traders understands probability. Right. You see yourself where you are and you see where you need to go. If you're still seeking excitement, you're still chasing moves, you still react emotionally to trades, you still chase certainty, you are not a professional. You are an emotional trader. You need to move where you start seeking consistency. You need to start waiting for setups. You need to execute systematically, as we have discussed with the framework, and you need to understand probability. All right. Now, which trader survives the longest? One, is it the most intelligent person? Number two, is it the most disciplined? Number three, is it the most aggressive? Number four, is it the most confident? Which trader survives the longest? A, most intelligent. B, most disciplined. C, most aggressive. Or D, the most confident? Let me know in the comment section what you think. All right. Trading, a lot of people are saying B, which is disciplined. You are right. You are right. The most disciplined trader is the one that survives the longest. Not the most intelligent, not the most focused. It's the most disciplined. Because self discipline is the ability to do what you should do when you should do it, whether you feel like it or not. All right. Um, Trading often requires strategic self control. In the market, it's you versus you, guys. It's you versus you. All right. You need strategic self control. You need to be able to adapt to different market conditions. In closing, I'm closing now. All right. You need to be able to protect your capital. I spoke about capital preservation. You need to think in probabilities, all right, not certainty. You need to control your emotional state and you need to execute consistently, all right. The supreme art of war is to subdue the enemy without fighting. The supreme art of trading is to subdue the market without fighting with the market. All right. Without fighting with the market. And I say here, some of the best trades are often the ones you did not take. I'm sure you've never heard of that one before. Some of the best trades are often the ones you did not take. All right. So in trading, you need strategic self-control in order for you to survive long term. All right. So this is your homework in closing. This is what you need to do. What is the one behavior you must improve immediately? Write it down, speak it, and then commit to it. What is that one behavior? You know it. It's different for everyone. You're going to write it on a piece of paper. You're going to paste it on your laptop screen. You're going to paste it as a wallpaper. You're going to have it as a wallpaper, as a screensaver wallpaper on your phone or on your laptop or on a computer. What is that one behavior I must improve immediately? Keep speaking it that I need to change this, and then you commit to changing that, and let's see how far you will go. That is it from me, guys, and I just want to give out a risk warning again that CFDs are complex instruments and come with high risk of losing money rapidly due to leverage. 76% of retail accounts lose money when trading CFD with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. That's it from me, guys. It's been a wonderful session. I wish I could continue going on and on and on and just pouring out into you. But it has been a great session with you guys. I hope you guys learned a lot. Please give me your comment in the comment section, your review in the comment section of what the session was about. What did you learn about the session? What did you love about the session? Let me know in the comment section for the purposes of also me just knowing that what I should be doing next time in order to improve what we teach, and what do people like, what is it that you didn't like. Your reviews are very important for me, and I really appreciate you guys. Thank you so much for taking your time to be here with me today, spending time with me and the IUX team. All right, I thank you guys so much. I am going to hand over to our moderator, Mr. Joshua Lim. Thank you guys so much, man. Have a blessed